Selina, we had you on a couple weeks ago and on this tech route, asking you what was going on. And at that time, you were saying, look, I think some of these names have found a bit of a bottom. I think we've gone down close to 20% since then. Tell us how you're viewing things now. Are we close to a bottom?
Morning, Yvonne. We have heard a lot about the policy tightening and the policy risks. And therefore, unfortunately, short-term volatility is likely going to keep the share prices moving sideways, most probably. But over the longer run, I think quite a number of these internet e-commerce names are already offering quite good value at the current share prices.
What would be a good leading indicator to watch then, if apart from valuations, that might indicate that money might be coming in?
I think we have to watch out for the government actions. For example, when the government says something or the government media says something, then probably the market will give some knee-jerk reaction. But if you were to look at the government action over the past week, some are negative, some are actually not that negative. And therefore, if the actions are more negative, then you're likely going to see some more downside. But since I think there are signs that these policy measures are not totally negative, and therefore we are likely seeing some support at the current level. And therefore, downside shouldn't be material, is our view.
Selina, I had a guest on yesterday that said, look, it's very dangerous that you're going to face this whiplash if you just jump from sector to sector, thinking that you're going to be a little bit safer from regulatory risk. And we certainly saw that this week. You know, everyone said, look, you can go into local chip makers. And then we saw a headline crossing about speculation in that industry as well. And you see kind of that hit. Is there actually a sector that you think is immune to the regulatory regime, or is that just not the strategy to go forward?
I think it would be safe to go along the government's policy. For example, the government is for renewable energies. It's for new energy vehicles because China does have a target to become carbon neutral by 2060 and emission to peak in 2030. And therefore, from now until then, we're likely going to see support in those areas. And having said that, sectors or sector stocks along that theme should see better performance. And in fact, they had outperformed quite a bit. And I think the rally will likely go on for the rest of the year.
Okay, and Selina, you talk to, of course, the investors and the clients of Credit Suisse a lot, the rich clients, I should note, of Credit Suisse. How would you gauge their mood as far as appetite for either, whether that's Hong Kong equities or mainland equities? What's the risk appetite like right now?
Very interestingly, I think investors are totally interested in Hong Kong China stocks. In a way, I do believe that they think Hong Kong China stocks are not expensive compared to elsewhere in the world. And in fact, China is a place or a market that offers above average growth, earnings growth, both in terms of revenue and earnings growth in the next business cycle, and therefore they're interested. Although they are quite risk averse at this time, I think they are trying to bottom fish rather than say, I'm going to avoid this market totally as a whole. So I think they would like to take some risk at some point.
Selina, up until maybe the last 2 days, everyone was just piling into, well, a lot more investors were piling more into the bond market, more so than equities. What do you think are some catalysts for the equity market right now? Do we need a triple R cut from the PBOC, for example, in order for things to move a leg higher? Or do you see that as unlikely at this point?
For the rest of the year, I think at the end of this year or early next year, that can be a potential. But in the next quarter or so, I think we're likely going to stay the way it is right now. But one thing to watch out for is government support. If there's any sign or confirmation saying that the policy tightening is coming to an end, or there's some kind of ease in the tightening process, then we're likely going to see some positive signs. Or positive move for the share prices in the market.
Yeah, Selina, some analysts have pointed to the fact that because of regulatory reasons or other things, that China needs to trade at a big discount to U.S. peers. What would you say to that?
It's already reflected in the price. we are trading at a huge discount compared to elsewhere in the world. So valuation is not demanding at all. And if investors do not like the policy issues that's overhanging some of the non-state entities, probably state entities or the sectors would offer a better investment opportunity in the short run, 3 to 6 months.